Hey guys, what's up? Welcome back to another video. In this video, I'm going to be doing a third quarter earnings results analysis for Meta Platforms, the parent company of Facebook. And this video is going to be very different from a lot of my other videos because typically I tend to cover stocks that are presenting strong buying opportunities or stocks that are presenting some sort of intriguing presentation or value proposition for investors. But Meta Platforms is unique in that, as we can see over the 5-year chart, they're down almost 50% in the same time period that the S&P 500 is up almost 50%. And a lot of that decline has come over the last year. We can see that over the last 12 months, Meta Platforms is down from a share price of about $340 per share to only $90 per share. They're down about 73% over the last year in the same time period that the rest of the market is down on average about 20%, as we can see right here. So Meta Platforms is not performing too well at the moment. When they announced their earnings for the third quarter of 2022, their share price dropped from about $129 to about $100, or below that, about $99 per share. And now it's trading at $90 per share. So we're going to look into some of the recent news that's come out about Meta to see why this might be happening. Then we're going to look into their financial statements to get an understanding of the financial health of the company. And then I'm lastly going to end the video off by doing an intrinsic value analysis to see what the intrinsic value per share for Meta Platforms is right now and when it might be presenting a good buying opportunity from a value investing perspective. And so right here in this article, we can see they titled it, Facebook parent company Meta is now the worst performer in the S&P 500 this year. And so that's saying a lot, especially considering that the S&P 500 is down. So most of the stocks in the S&P 500 are not doing that well. And even with that said, Meta Platforms is doing the worst. And so as we can see right here, they point out that Meta is at the bottom of the S&P 500, trailing other underperforming companies like Align Technology, Generic Holdings, SVB Financial Group, and Match Group. Their shares are down about 73% over the last year, and a lot of that is coming from the fact that investors are pretty worried about Meta's investment in the metaverse and trying to build that out and bring that to market. And so we can see right here, along with the massive drop in their share price, they point out that one of the reasons for that is because they reported a second straight quarterly sales drop in October for their third quarter earnings results, and their fourth quarter guidance for the end of the year for 2022 was below analysts' expectations. So historically speaking, they haven't really been meeting analyst expectations. And in terms of their prospective guidance for the future, it's not really looking that optimistic either. A part of this decline, Meta attributed to the fact that there's potentially a looming recession, which is causing businesses to pull back on spending money on advertisements on their Facebook platform. And then on top of that, one of Apple's 2021 updates made it a little bit more difficult for Facebook to track users across the internet, which obviously is one of their competitive advantages because Facebook is really good at tracking users' data, and that's what makes it such a powerful advertising platform. But if they're not able to do that as effectively, then their competitive advantage starts to go away slowly. And so another thing that they point out in this article is that a lot of investors are worried about the cost of building out the metaverse. We can see right here, they point out that so far in 2022, the investments that Meta has been making in their reality labs operating segment, trying to build out the metaverse, virtual reality, augmented reality, that segment of their business has lost about $9.4 billion so far in 2022. And on top of that, Mark Zuckerberg and Meta basically said that they expect that these losses are going to grow significantly year over year into the future. So basically, they're not only saying that the pain isn't done yet, but they're saying that pain is probably going to get a lot worse in the future. And then obviously there are some investors that are thinking that Meta is going to rebound in the future. And so if that were the case, then that would mean that Meta could potentially be presenting one of the strongest opportunities to build wealth in the stock market at the moment, simply because if they did rebound from their current share price back to their all-time highs, then that would be a lot of growth for investors who are currently buying into Meta Platforms at the current share price. And so right here, we can see their financial statements for their third quarter 2022 earnings results. This is their balance sheet for the third quarter of 2022 compared to their balance sheet for December 31st, 2021. And during that time period, their total assets have increased from about $165 billion to $178 billion worth of total assets. And the majority of their business is financed by equity as opposed to liabilities. But something to really track here and measure, which is pretty interesting, I pointed out, or that I saw when I was looking at this earlier, was their total liabilities have increased from about $41 billion to $54 billion, but their total stockholders' equity has decreased from about $124.8 billion to $124 billion. And that actually has come as a result of a decrease in retained earnings from $69 billion to $67 billion, as well as an increase in accumulated other comprehensive loss, which is essentially a line item that points out some of the other comprehensive income items that don't really show up on the income statement because they aren't really realized gains. They're unrealized gains and losses on trading securities and things like that. And in that line item, we can see that their losses have accumulated past $600 million up to $5 billion of accumulated losses. And then on top of that, we can see that in their equity section, they've actually been trying to raise money to finance their business by issuing new shares of common stock. Their additional paid-in capital line item has increased from $55.8 billion to $62 billion. So basically, these three line items from a financial analysis perspective usually don't mean they're usually not really good signs, obviously, because if you're looking to invest in a company and you're looking at their balance sheet, some positive signs usually are an increase in stockholders' equity as a result of an increase in earned capital, because that means that the business is profitable, and as a result of all of the net income they're retaining, they're able to then put that on their balance sheet in terms of retained earnings, which is money that they can then use to go and distribute to shareholders or reinvest back into the company. But in terms of Meta Platform's case, we can see their retained earnings line item is decreasing. And then on top of that, usually you want to invest in a company when you see that their additional paid-in capital account is decreasing, because that means that the company is repurchasing more common stock than they're issuing. And that would eventually result in an increase in the share price for the company, because if there are less shares outstanding, but the market capitalization is increasing, then that increases the share price for each individual shareholder. But in Meta's case, they are actually issuing more shares than they're currently repurchasing, which means that they're diluting their previous shareholders by adding more partners to the company. And so this really isn't that good of a sign, but obviously we'll see how this turns around in the future for Meta. Can't really jump to too many conclusions at the moment. And so right here we can see their income statement on page 8. And their income statement unfortunately did not show very optimistic results either, similar to their balance sheet. We can see that year over year, they're comparing their third quarter results for 2022 to the third quarter results for 2021. And we can see that their revenue has decreased year over year from $29 billion to $27.7 billion. So that's a decrease of about 4% year over year. And in this same time period, their total costs and expenses have increased $18.5 billion to $22 billion. So in the same period that their revenue has declined 4%, their costs and expenses for operating their business have increased about 19% year over year. And so lastly, if we go to their bottom line here, their net income, we can see their net income has declined year over year from about $9.1 billion in the third quarter of 2021 to $4.3 billion in the third quarter of 2022. And so that's a decrease of about 52% year over year in their bottom line net income. And then if we go to their earnings per share amount, we can see that's also decreased from about $3.22 per share to $1.64 per share. So that's a decrease of about 49% year over year. So their revenue has decreased, their costs and expenses have increased, their net income has decreased more than 50%, and their earnings per share has also increased almost 50%. But that being said, something interesting that they pointed out in another part of their report is that even though their income statement is showing this decline in revenue and net earnings, Facebook has actually reported an increase in their daily active users to about 2.93 billion daily active users. So that's up about 4% year over year. So their social media platform is growing at the moment. But that being said, they aren't able to then convert that into an increase in revenue and earnings at the moment, mainly due to the massive increase in the costs and expenses to operate their business. And so now I want to go to page 11, and we can see their cash flow statement right here. They're comparing their first 3 quarters for 2022 to the first 3 quarters for 2021. And we can see their net cash provided by operating activities has decreased year over year from about $39.5 billion to $35.9 billion. And then on top of that, we can see that in their cash flows from financing activities, they've repurchased about $21 billion worth of common stock year to date in 2022 compared to $24.4 billion in 2021. And so of this $21 billion that they've repurchased in the first 3 quarters of 2022, about $6.55 billion worth of that was repurchased in the third quarter. And the board of directors for Meta Platforms has actually already gone ahead and authorized an additional $17.78 billion worth of available share repurchases that Meta is allowed to make in the future. And so that's obviously a lot of value returned to their shareholders. But as we saw from their balance sheet, it looks like they're actually raising more money by issuing new shares than they are returning to shareholders by purchasing shares from their company at the moment. And so now what I want to do is look at this discounted cash flow model to try to figure out what the intrinsic value per share for Meta Platforms could potentially be. And right here, this is something pretty interesting. So usually I get a lot of the growth rates for my videos on my YouTube channel from Yahoo Finance, mainly because I could calculate this stuff on my own, but I prefer to try to leave these videos as unbiased as possible and just try to use the information that's made publicly available. And so in this case, I usually source my information from somewhere like Yahoo Finance or other reputable sources for financial information. And so right here, if I actually go to Yahoo Finance right now and go to Meta Platforms and their analysis tab and scroll down, we can see that the growth rate that analysts on Yahoo Finance are projecting for the next 5 years for Meta Platforms is negative 17.5%. And actually over the last year, Meta Platforms has declined in growth by about 15%. But then over the past 5 years, they've increased by about 12%. And so based on that, Yahoo Finance analysts are estimating that it's going to decline by about 17.5% year over year for the next 5 years. And so I sort of just left that constant for the next 5 years after that as well, just using the law of conservatism here to try to value Meta. And so we can see that the free cash flow for 2021 came out to be about $39 billion. And then we can see they have a total cash position after subtracting their debt on their balance sheet of about $15 billion, and they have about 2.2 billion shares outstanding. And so with these metrics in mind, including the negative year-over-year growth rate for the next 10 years, we can see that the intrinsic value per share based on these very, very negative metrics would come out to be about $78 per share. And so based on that, it would look like Meta Platforms is trading above their intrinsic value per share at the moment. But let's say that Meta Platforms, hypothetically speaking, didn't grow or decline at all over the next 10 years and it just stayed constant at where it was. Based on the current free cash flows for 2021 projected into the future for the next 10 years, we can see that the intrinsic value per share would be estimated to be about $180 per share with a 50% margin of safety of $90 per share. And so based on that, it would look like Meta Platforms would be trading at a 50% margin of safety in the event that their business didn't grow or decline at all over the next decade or so. But based on the historical, obviously based on this right here, the historical events that we've seen from Meta Platforms, it's likely that, especially considering the fact that Mark Zuckerberg pointed out in the earnings announcement that the operating losses for their investments in Reality Labs are probably going to grow even more than they already have. Their business probably is going to continue to grow at a negative rate, at least in the short term, until they're able to start to see some return on their large investments in that platform. And so to end off the video, I wanted to compare Meta's business efficiency and their financial ratios against some of the other big tech companies in the stock market, specifically Google, Apple, and Microsoft. And we can see that from a competitor analysis perspective, Meta is actually doing extremely well. We can see that they have the highest gross profit margin at about 80%. They have the highest not the highest net profit margin, but the second highest net profit margin at about 33%, second to Microsoft's 36%. And then they have the second highest return on assets at about 24% compared to Apple's 28%. So from a competitor analysis perspective, based on these financial ratios, it looks like Meta is still pretty competitive in comparison to the other big tech companies in the technology industry. But from an intrinsic value perspective, obviously, especially based on these negative growth rates that Yahoo Finance is estimating for Meta platforms into the future, it looks like they might not be trading at a very good buying opportunity based on the fact that they're currently trading above their intrinsic value per share. But their stock price has fallen almost 80% now, just passing the 70% mark over the last year. So based on that, if you were anticipating some sort of future recovery for Meta and you bought into them at a share price on average of about $90 per share and they return to about $300 to $400 per share, that would be a massive return on any investor's investment. But only time will tell to see how these investments in the metaverse will pan out for Meta platforms. If they are able to establish that foothold in an emerging technology like that, that would obviously be pretty huge, but it's really tough to tell if they're going to be able to do that, especially this early on. So I'm not really sure what to make of Meta platforms right now, but I'd love to know what everyone watching this video thinks about Meta platforms. Is it a good buying opportunity right now? And where is this stock and this company really headed into the future? Let me know what your thoughts are in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.